Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze Axis Nifty Midcap 50 Index Fund, and we are going to find out that which kind of investor should invest in this fund, what should be the risk appetite, and we are going to go through other fundamentals. So it is an open-ended index fund tracking Nifty 50 Midcap Index, and it is opening on 10th of March and it closes on 21st of March. So it it is launched by Axis. So Axis has been trusted for 25 years, and it is very professionally managed fund. And as you know, it is an index fund, so it is a passive fund. It is going to track its benchmark, and no active management or no research or technical or fundamental analysis is involved in this management of this fund. So it is suitable for investors with high risk appetite or for long-term wealth creation. We are going to see ahead how it is suitable. So before we go ahead, please subscribe Yoshop channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yoshop.com and use coupon code YO100 for flat rupees 100 discount on all products and free 1 year GST and ITR e-filing services. Now let's quickly go ahead and find out more about this new NFO. So NFO details, so Axis Nifty Midcap 50 Index Fund and open-ended index fund tracking Nifty Midcap 50 Index. So benchmark is Nifty Midcap 50 Total Return Index, and it is passively managed fund, open-ended, so you can exit and enter in this fund anytime. Product labeling, the product is suitable for investors who are seeking long-term wealth creation solution. An index fund that seeks to track returns by investing in basket of Nifty Midcap 50 Index stocks, aiming to achieve returns of the stated index. And product riskometer, if we see, so it is a very high risk product, and benchmark riskometer is also very high. So minimum investment at the time of purchase is 5,000 rupees, and it is in the multiple of rupees 1, and further then you can invest minimum 1,000 rupees post investment of 5,000. Investment objective to provide returns before expenses that closely corresponds to the total returns of the Nifty Midcap 50 subject to the tracking error. So it is going to it is going to track the benchmark Nifty Midcap 50 index. Liquidity, the scheme offers units for subscription and redemption at NAV based prices on all business days on an ongoing basis. Asset allocation, so 95 to 100% security is covered by Nifty Midcap 50 index, and debt and money market maximum 5%, to maintain liquidity during redemption or subscription of new investors. Few other details. So plans, two type of regular and direct plans are available. Eligible and load structure, if we see, exit load is 0.25% if redeemed, switched, or within 7 days from the date of allotment. So you can say 7 days lock-in period post your subscription to the NFO. Benchmark performance. So since inception, this benchmark has given around 12% returns. In this quarter's -7% returns. In last 1 year, index has given around 15% return, and over long term, over period of 5 years, index gives around 13 to 14% returns. So if you see correlation between Nifty 50 and Nifty Midcap 50, so correlation stands at 0.883 or something. So they give similar returns, and but risk appetite in midcap is quite high. Sectoral representation, so financial services has highest weightage given with 22%, followed by industrial manufacturing 11%, automobile 11%, IT 9%, chemical 6%. So these are 5 top sectors invested in. As you can find out, uniqueness in sectoral allocation is industrial manufacturing. You regularly don't find such high weightage to industrial manufacturing. So the index is highly dependent on manufacturing industry rather than service industry. Fundamentals, so price to equity ratio is 25, which is justified. Price to book ratio is 3. Top constituents are Tata Power 4%, SRF 4%, Voltas 3%, AU Small Finance Bank, Bharat Electronics 3%. So as you can make out, financial services and industrial manufacturing is dominant in this index. Pros of investing in this index. So has a diversified portfolio with investment in stocks from various sectors. So if you are looking for a diversified portfolio in mid cap category and want to invest in various sectors, then this is the right investment. Will be suitable for aggressive investors looking for mid cap exposure, since risk is very high. So you have to be, you should have a long term vision of wealth creation and should be aggressive investor. The fund is free from fund manager bias. So since this is a passively managed fund which directly replicate the performance of midcap 50 Nifty Midcap 50 index, so it is free from manager bias. Other opportunities or pros of this fund are long-term investment in this index fund has got potential to give you capital appreciation. So if you have goal of long-term capital appreciation or creating a large chunk of money for your retirement, then this, and if you have high risk appetite, then you should invest in this fund. As it is managed passively, it is expected to have lower expense ratio than actively managed. So this is obvious since the involvement of managers is less, so less expense ratio of this fund. Risks of this one: not suitable for conservative investors as it invests in small cap companies having less stability and more volatility. So as we have seen, like in this quarter, this is negative 7% return has come. So conservative investors can't afford this. So it is not you know suitable for them who has moderate to low risk appetite. As an index fund, this may underperform its index due to certain factors. So there can be some replication errors and there can be some underperformance in this fund. This fund will not be able to deliver market beating returns. So market beating returns are over, if you see breadth of the market, it gives over 20% return small cap. So you might expect inflation beating returns, but not market beatings, returns. Cons or risks. So based on the market outlook, the fund cannot change the allocation dynamically. So there is a constraint for fund manager to limit themselves to this fund or the index, so they cannot change really dynamically to this one. No analysis of the underlying stocks nor any research of the companies which they want to invest. So no fundamental or technical analysis involved. Active funds in comparison can take calculated risk. So at the time of bear market, actively managed funds can reduce or your risk, but not in this fund. So should you invest in this fund or not? This is the most fundamental question. So you should be it is suitable for aggressive investor who is not willing to invest in actively managed fund. For investors looking for large cap or small cap exposure, should this fund will not be suitable since it's a mid cap fund. Long term investments in actively managed portfolios can produce better returns. There are existing similar index fund with less expense ratio and less tracking error. So you can look at the peers of this fund and find out their performance and you can take the decision. Investor looking for investments that can beat the market should avoid this fund since it can give around 10 to 12%. It don't expect large returns from this fund. So now you should consider your wealth creation goal and your vision of wealth creation, your risk appetite, and should plan to invest in this fund. Thank you.